Hello everybody and welcome to the midweek market update from Smack the Markets for the 20th of May. So this week we've seen an increase in the tensions between US and China, which certainly isn't helping market sentiment. We've also seen a bit of a waning in the optimism for a vaccine, or at least the speed of potential vaccine development. And at the same time, we've seen the US stock markets continue to see increases in value. So quite a mixed sort of picture as the week has been progressing. So we'll take a look at some of the markets that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. So if we come to the Dow first of all, and if we take a look at this on the daily time frame, we can see that the market now this week has managed to rally up. It's managed to break above the 24,000 level. In fact, it's managed to get right the way up here to the top end of this range, which is around 24 sort of 68 or 24 sort of 70 area. If we just take a look at this on the daily time frame, we can see that the market did try last week to break underneath the structure points of this sort of range. Couldn't hold underneath there and sort of promptly sort of turned around. Now, if we take a look at this on the 4-hour time frame, we can see the range here that the market's been contained in for quite a few weeks now. The rejection to the short side here, and the rally all the way up now to the top end of the range at 24.68. So at this point in time, the market's still within the context of a long trend on the 4-hour time frame. It's pulled back into another structure point we have, which is a 24.150, and now broken through the 24.300 level, which really sort of puts it into the trading window here up towards that 24.680 level. Now, above 24.680, there is another trading window up towards 25,000. So, and that's a big number. It's a big psychological number. But I think the biggest thing here is if the market does break through 24.680, is the fact that it's got out of this range. And that could give many traders, or new money, I should say, the optimism to purchase more and drive the market potentially even higher. So at the moment here, what we're doing is we're looking at trading these windows in intraday price action, not looking at any new swing positions at this moment in time, and keeping an eye out for the short side here, because the market's, it's rejected this sort of level twice now, and it's quite a bearish rejection here. And of course, there are plenty of sort of challenges ahead for higher stock prices. So plenty of things to for the markets to be concerned about. So if we do see weakness coming in, of course, we've got the structures to the short side, which we see will be sort of fairly quickly tested. And of course, getting underneath the 23,100 area again is going to be the sort of key. Breaking below these lows does open up for much sharper moves to the short side. But at the moment, certainly don't want to trade against the trend, and we'll certainly be happy to trade these markets intraday within the context of the daily moves. Now, if we come and have a look at gold, on Monday, we were looking for a retracement here in gold. The levels that we had that we were discussing was possibly into 1760 or into sort of 1740 area. Now, the market actually sliced straight through 1760, got back into the 1740 area, found support just underneath here, and now we're starting to see the advancement again. Now, with the amount of stimulus that's been pumped into the system, technically gold should be much higher in much higher prices, but of course that doesn't give us a technical setup, and it doesn't sort of help things from a technical and timing perspective. That could take weeks, months, or maybe even longer for that to sort of come to fruition. But at the moment, the market is moving in the right direction. We're still liking this to the long side, and still looking at opportunities here for long gold. Now, on the way back up, it's worthwhile just keeping an eye out around that decision point, around 1760. But once the market gets through 1760, then there could be sort of higher prices here to come, and there's not a great deal of structure above that 1760 level. Here on the 8-hour time frames, and certainly on these macro picture time frames, the trends are still starting now to look rather nice, and sort of reasonable structure in these too. Now, on Monday, we discussed Kiwi dollar and opportunities here on the Kiwi dollar. If we just open this up on the daily time frame, the opportunity that we were looking for was a break underneath the sort of previous daily candle here, and looking for weakness underneath 59, really sort of looking for this to sort of open up to the short side. This was really a dollar strength play, and the expectations were that this was our go-to market for a dollar strength play. Now, what we've seen, of course, is dollar weakness as the weeks progressed, and this has completely turned around. There's been no setup here, or in fact there was a setup here on the 4-hour time frame. You can see the setup that we called in the trading room didn't trigger, and the market sort of promptly moved to the higher end of the range as the US dollar promptly weakened. So with Kiwi here now at the top end of this range, still stuck within this context of this range, as you can see on the 4-hour time frame. We're not looking at any new opportunities on this one just yet. Other markets that we are looking at though is sterling. So we like sterling to the short side at the moment. It's been very weak over the past sort of few weeks, and just take a look at this on the weekly time frame. You can see that for the longer term here, the market has just been consistently putting in lower highs, and and sort of compressing down and gradually sort of moving lower. Now, price has just sort of got underneath this sort of 132 area. You can see through here there's quite a significant structure point on the weekly chart, and price has now sort of just pulled back into that level. So again, we're looking at evidence here for weakness coming in, and if we can get some weakness, we're looking at this moving back down to the short side here on this market. So again, if we move down to the daily time frame, you can see that we've got a reasonable trend here forming on the daily time frame with lower highs and lower lows. The market sort of, when it comes or retraces back up into significant decision points, it seems to sort of find rejection, and the next leg continues. At the moment, the market's just back in there. It's just tested 132.50. Starting to get a bit of a rejection style candle forming at the moment. Certainly the indicators are looking bearish as well. So again, we haven't got a signal just yet, but if we're keeping an eye out here for a rejection of this zone, and looking for moves to the short side on the Great British Pound against the yen. So there's a few markets there that we're keeping a close eye on in the trading room coming into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.